Dear viewers, in this video, I'll share you how you can easily analyze the management sitting from your home. See, management analysis is very important because normally if you find a good quality business with good management, so in such case, even if the stock price drops during any kind of market crash, then also the stock price recovers. But you'll find there are a lot of stocks where the price drops after any kind of market crash, but after that the price won't recover at all. So if a business don't have that much fundamental strength, or if a business has poor quality management, and in such case if the stock price drops, then it will be very difficult for such stocks to recover. So this is why before investing in any stock, you must have a primary idea about the management quality, and in this video we'll address the same. I am Prasenjit Paul, author of the best-selling book How to Avoid Loss and Earn Consistently in the Stock Market, which is still the highest rated book written by any Indian author in the stock market. And I am also investing in the stock market since 2010 and achieved financial freedom from here itself. The first point, you need to monitor the promoter's shareholding pattern. See, no one knows a company better than their promoters. If you are an owner of a business, then you know best about that company, right? So in case promoter increases their shares from the open market, that is considered very positive for any stock. See, now a promoter can increase their shareholding via two methods. One is open market purchase. It means promoters are directly coming in the market and purchasing their shares as like you or like me purchase that particular share. So that is open market purchase. And the second is preferential allotment. Preferential allotment is, suppose promoters or owners of the company through a board meeting allotted their own shares to some predefined rate. That is called preferential allotment. Now, if promoters increase their shares via preferential allotment, that is not that much positive for a stock. But if promoters increase their holding via open market purchase, that is very much positive. And history says whenever promoters increase their shareholding from open market purchase over a 3-4 months or maybe 1 year period, during that time mostly share price increase a lot. Now, how you can know whether the promoter is increasing via open market purchase or preferential allotment? Those details are available in the corporate announcement section. And even also by the end of this video, I'll share you how easily you can check those patterns and all. So remember, if a promoter increase their shareholding through open market purchase over a period of time, then in such cases, maximum time stock price increase a lot. But if promoter increase their shares through preferential allotment, then that may not be that much positive for the stock price. The second most important thing that you need to know is share pledging by promoters. What is this share pledge? See, shares are considered as an assets. For example, when I or you, when the common persons, if we take home loan or car loan, if we take home loan, then the bank keeps that home as a pledge. It means, for example, if for any purpose, for any reason, I can't able to repay that home loan, then the banks have rights to sell that home to recover my money. Similarly, whenever all the companies took loan from bank, then if the bank considers that the company is strong, then the bank don't take any kind of collateral. But if the bank thinks that this particular company is not that much strong, this particular company may not be able to repay that loan, then the bank asks collateral. And as a collateral, the promoters are required to keep their shares pledged to the bank. It means if in future company face some kind of trouble or the company can't repay their loan, then banks has rights, or in fact I'll say that the bank can sell those shares to recover their loan. And this particular thing brings a lot of uncertainty, a lot of pressure in the stock price. In the past, there are a lot of examples where despite having a good business, just because of this share pledging issue, that particular share destroyed investors' wealth. A very common example is Zee Entertainment. Zee Entertainment, as you know, that's a very popular television channel. They have a very good app called ZEE5 where you'll find a lot of movies, and I hope you know these channels like Z Cinema, Z Music, Z TV and all. So the business model, the business is great. That's a successful business, but that promoter, I mean the promoters of Z Entertainment had a lot of shares pledged, and just for this reason, if you check the past price chart, you will find Z Entertainment destroyed a lot of shareholders' wealth. So this is why the one thing you need to learn, or one thing you must need to keep in your mind, that stay away from shares where promoters pledged their shareholding. Because whenever promoters keeps pledge, then there is always a possibility, there is always a huge uncertainty in the stock price. See, I'm not saying that if you find there are 10 companies where promoter shares are pledged, it doesn't necessarily that all the 10 companies must generate loss for the investors, because you know that share price don't run based on some mathematical formula. There is no such fixed formula in the stock market. But what I can say is, out of these 10 companies, majority of those companies will destroy shareholders' wealth. I mean, majority of those stock price will underperform the market. So why you should take the unnecessary risks of keeping your hard-earned money, keeping your investment in a company or in a stock where promoters pledged their own holding? Why? So it is always better to avoid where promoters pledged their holding. The third point, a lot of time you will find that a company where there is zero promoter holding, there are a lot of good companies like HDFC Bank and all. So there is no identified promoters. Institution run those business. Those are professionally managed business. So in such case, instead of promoter holding, you need to consider the combined holding of FII and DII. I mean the institutional holding part. So in such case, if the institutional holding keeps increasing, then that is good for the stock, and in most of such cases that increases the share price over a period of time. But for all other stock, if you find that the retail category, there is on the shareholding pattern, you will find there is also a retail shareholding. If you find on any particular stock this retail shareholding is increasing but promoter and institutional part is decreasing day by day, then that's a very red signal and you should avoid such stocks. A very good example is Yes Bank. Since 2018, if you follow the shareholding pattern, you will find the retail shareholding is increasing day by day, but the promoter part and the institutional part is decreasing day by day. It simply means normal retail investors are buying those shares, while as the informed investors or promoters, institutional big players, are dumping those shares. So if you find any such pattern, in any of your portfolio stock, it is always better to stay away from stocks, because such stocks are often considered as a wealth destroyers. Now I hope those 3 points are clear. Now let's have a quick look on the screen where I will find how you can quickly check the pattern of promoter holding. I mean whether they are increasing or decreasing, whether they pledged their shareholding or not, whether retail part is increasing or decreasing and all. So let's move forward to the screen. So visit the website trendline.com. So as you can see from my browser address trendline.com, after visiting that website, simply click on the search box and let's say type any company name. So let's say I'm typing G Entertainment. So G Entertainment, and here you will find lot of other menu. Now click on the shareholding part. And this website is also free. As you can see, I didn't even logged in. If you can log in, you will get many more features, but even without login, even without any paid version, you can get the basics and obviously all the shareholding details. Now from this shareholding pattern, simply scroll down this page and you will find this is the latest December 21 shareholding data. So as you can see, so this column represents the promoter holding, and out of this how much promoters pledged, so you will find in from this row. So as you can see, the promoter pledged increased a lot till September 2019, and if you check the stock price from 2017 to 2018 and 19, stock price decreased a lot. Fortunately for the Z Entertainment, in the last few quarters the promoter pledged reduced a lot, and if on the next year or if in the coming days the pledge becomes completely zero, then obviously there is again the chance of this G Entertainment to outperform the market. So but from this pattern, as you can see, like the public holding, public increased a lot. So this column is the public shareholding. So even on this period, on since 2018 to 2019, overall public holding increased a lot. However, promoter holding decreased. So such kind of combination is very bad for any kind of investors. If you visualize such kind of pattern where the promoter holding or the combined FII or DII holding is decreasing but the retail public holding is increasing, then it is always better to stay away from such companies. Again, another example as we have discussed, so let's say for a stock Yes Bank. So again, for Yes Bank, what you will find, the trend is not that much favorable. So again, I am scrolling down and here you will get the promoter holding. This is the promoter part, then this is the pledged part, and this is the public part. So again, in public part you will find the public holding increased a lot, and during those periods the stock price also decreased, the stock price crashed a lot. Now, as I have mentioned, like the promoter holding reduced, and to right now promoter holding is 0. So now you need to, instead of promoter holding, you need to consider the combined holding of FII and DII. So in similar fashion, you can search for any company and you will get the promoter holding pattern, pledged share pattern, as well as public share pattern, and lot of other details as well from this website itself. So I hope that part is very clear. Now you need to remember one thing, that the equity analysis is a huge subject. It's not a small subject. For example, I have mentioned that wherever you find the promoters pledged their shareholding, you should stay away from such stocks. It doesn't mean if you find a stock where there is 0 promoter pledge, that is indicating that the share price must increase. No, because there are a lot of other things. There's a huge part. This entire management analysis or be the equity fundamental analysis is a big part. So this is why if you are interested to learn a lot more about equity analysis, then you can refer to our website, wherein a very easy, very simple language with live demonstration I have shared how I analyze a particular stock. So the link is given above, and also you'll find the link in the description where you'll find the equity analysis video tutorial in an easy to understand language. Now, for the management analysis part, I can prepare another video. I can call it as a part 2 video if I find enough views, or if I find that people are sharing this video. So if you like this video and if you want to get similar kind of second part of video of the management analysis, then you must need to like and share this video among with your friends. And also don't forget to click the subscribe button and then click on the notification icon to get my upcoming videos. So that's it. As on today, I'll come with another insightful video on some another topic on the coming days. Till then, happy investing.